Patterns often outlast surprises in the world of dividends. For Filinvest Land, 2026 is shaping up to mirror the familiar, a steady, flat cash dividend. Not a cut, not a hike, but a reaffirmation of prudence. This isn't due to a lack of means. It's a deliberate reflection of the company's financial landscape and strategic priorities. Let's start with the numbers. In 2025, Filinvest Land delivered a solid performance. Revenues climbed 6% to nearly 26 billion pesos, with net income up 4% to 4.81 billion. Resilient by any measure, especially against high interest rates and cautious market sentiment. Yet, stability is not the same as momentum. When earnings growth is even and capital remains strained, boards rarely opt for bolder payouts. The company's recurring income, especially from retail leasing, stood out. Revenues there grew 10%, and retail occupancy improved significantly. These gains are the ballast that keeps dividends afloat through market cycles. But there's another side: higher finance costs. Interest charges rose nearly 19%, and coverage ratios narrowed. The bottom line? Operational gains are partially offset by the rising cost of money, limiting room for dividend expansion. History also speaks plainly. Filinvest Land kept its dividend unchanged at 5 centavos per share in both 2024 and 2025. That consistency is no accident. It signals preference for predictability over pursuit of higher yields, especially amid ongoing reinvestment and rising debt costs. Consider the company's capital allocation signals. Despite robust retained earnings, most are earmarked for future development. Fresh appropriations and an 11 billion peso bond raise clarify priorities. Fuel the pipeline, support expansion, and maintain flexibility, rather than lock in higher cash obligations to shareholders. Taken together, today's facts point to a single likely outcome. Filinvest Land's 2026 dividend will remain flat. The cash position is sound. Liquidity has improved, but restraint is the watchword while the company builds for the future. Only a marked easing in finance costs or a decisive boost in recurring income would change this trajectory. Until then, investors can trust in consistency, stability that prioritizes long-term value over short-term gratification.